Thanks everyone for joining. We're just going to do brief introductions, then hit the ground running. We've got a lot to cover, hoping to leave time for questions at the end. We are Vicente. We'll introduce ourselves, skip through the boring slides and get right to the good stuff. I am Michelle Bodian. I'm a partner here at Vicente, co-chair hemp and cannabinoid department, which these days means our hemp beverage department. I'm going to turn it over to my colleagues to introduce themselves, and then our special guest will reveal himself. Charlie?
Yeah, okay, we'll go to alphabetical. Charlie Alvacetti, based in Bethesda, outside of DC, also barred in New York, Colorado, Massachusetts. I've been moving around a lot. Help run the corporate group. I'll be focusing on the corporate aspects of these financings.
Thanks, Charlie. I'm Jeremy Shaw. I'm a partner and co-chair of our corporate group. I'm in Boston. Have been working on cannabis and now a lot more hemp stuff and transactional work for a while here, and work closely with Michelle on a number of hemp items. So I'll also be talking about the corporate aspects and leaving the fun stuff to Michelle.
I don't know about fun, but speaking of data, Ian, would you like to introduce yourself?
Hello, I'm Ian Dominguez. I'm the founder of Delta Emerald Ventures, and I guess also Canada Datacon. But more importantly, we're focused on investing in the hemp D9 space. We also are invested in the quote unquote cannabis industry, and our focus there is primarily on data, software, technology that the cannabis industry relies on.
So we're going to hit just a little bit of the beverage market overview. Spoiler, still working on gathering accurate data, but we have some data we're here to share. General corporate structuring, the stages of financing. You do not have to pronounce it as Charlie pronounces it. I pronounce it financing, just getting ahead of that one right there. Investor perspective, some regulatory considerations, and then the various stages of closing. Going to have time at the end for questions if we're efficient. I'm happy to cut people off to make sure we have time at the end. And then, of course, you can use the chat button and we'll circulate these slides afterwards. Okay, this is just kind of an old map. Obviously, we maintain our state-by-state tracker. Can't start any webinar without saying the word hemp chart. Got to stay true to myself here. But, you know, hemp law is constantly changing. This is our kind of snapshot as of September. If you want the latest and greatest, reach out separately. Happy to provide that for a price. So just generally green, where hemp beverages are permitted, kind of color-coded 10 milligrams or more, versus states with some severe penalties, prohibited under food and drug laws. Obviously, you might be looking at this and say, wait a second, XYZ retailer is selling, wholesaler, I ship D2C into that state. So huge disconnect right now with what law says and what's happening in practice, but do just kind of want to level set. Hemp beverages are expressly allowed in a number of states, various milligrams, various regulatory schemes. Obviously, takes the position generally CBD and THC is prohibited from being added to food or dietary supplement. They have released with that for the past 5 years their enforcement discretion policy. We're not going to get into general legality. We're just going to assume you all have a base level understanding and jump right into the good stuff here. Just sharing a little bit of data of consumers and population based upon what we're seeing. You know, we've been scrubbing, as the next slide will show, you know, a lot of hemp product sales have been trending. Sorry, next slide was supposed to magically work. There we go. You know, we're anticipating the size of the intoxicating hemp market, and particularly the beverage market, you know, projections, millions, billions over the next several years. As I mentioned, a lot of data projects in the works to obtain accurate data. And the next slide, you know, our best source of information that we have right now, you know, this blog is available on our website. Our in-house economist has put together. So we've been tracking of the states that have consumable hemp product tax requirements, really backing into what sales look like over time of the 3 states that we have publicly available data. And we should be getting the 4th state online, their data shortly. So check back to get some of that information. But as you can see, for the most part, lines trending up in terms of sales in volume. So
Yeah.
hoping before we get into the corporate structuring details, if you wouldn't mind giving a little bit of, from your perspective, an overview of kind of regulatory outlook, kind of the impact on the investment climate. You know, all these states have hemp bills flying around. Last year, we had 26 states change their hemp laws. The year before that, 23 states. We're on pace for a record 30, 35 states this session, looking like they're going to be changing their hemp laws. So how does the changing regulatory framework kind of impact what you're looking at from where you're sitting from an investor standpoint?
Yeah. So a couple of maybe principles or ideas that we have. One that we've been saying recently is that a push is a win, which is to say that the status quo, unlike in what we've seen in cannabis, I think a status quo actually helps in terms of the level of coordination. Every single day, this industry gets more coordinated, gets stronger. So it's important to think about that both on a federal level and at a state level. And then when you drop down, this really is a state by state game. You take a state like Texas, there's a lot of overhang right there right now, and it really could go in any direction, right? But in general, so it's important to note that the regulatory change is not in one direction, it's not omnidirectional. It can clamp back. But in general, we've been observing a trend of kind of moving towards allowance. And we've seen that most recently in Missouri. And I suspect that we will also see that. We'll start to see that crop up more often in the Northeast. So we're always looking for kind of key population centers that are coming online or expected to come online. And then the last point, just on financing trends, capital is still scarce, for sure. I do think that we're going to see capital shake loose specifically for this category. I'm observing that happening as we speak, but it will still take time. So I want everyone to that there will not be an immediate flood of capital unless something were to unexpectedly change, say at a federal level. It's going to take time for people to get up to speed, to start to see it surround them in their day-to-day lives, and for it to connect in that way. And that's kind of what it takes, I think, to really get people engaged on this space.
Well, thanks for that level setting. And I'll keep calling on you, but I'll make sure to be able to repeat the question and flag you better. All right, so now for the fun stuff, which is obviously why everyone tuned in, let's talk about corporate structuring. So Jeremy, going to pick on you here. I guess before you even get to the fundraising stage, what do you need to consider? How do you need to set up your company for success, especially if you're involved in multiple businesses, you know, alcohol, cannabis, whatever else you do in your day job?
Yeah.
You mind, sharing some thoughts?
Yeah, thanks, Michelle. You know, with the clients that we've worked with in this space, kicking off operations, kicking off financing, we spend a lot of time sort of at this stage thinking about how do we, you know, sort of, I always like to say, measure twice and cut once to set things up the right way, right? And there are a few things that you're going to consider when you're setting up sort of where to put your hemp operations, where your investors are going to go. Now, a lot of folks coming into hemp, they're coming from alcohol, they're coming from cannabis, maybe another industry, but particularly alcohol and cannabis, they're regulated markets. There's a existing business that obviously everybody, you know, people want to protect. They don't want to create some new line of business that's going to negatively impact those licenses. So the considerations there are going to be state specific. They're going to be operation specific. Are you handling product? What state are you in? Do you want to co-locate? And also, where are you raising money? Do you want, you know, are your existing investors coming along for the ride in cannabis? Are they not? Are you new investors wanting to invest in your existing business? And you also want to be practical. You want to set things up in a way that's going to allow you to be nimble. You know, Ian's point about the way regulations go, it can go in any direction, and you want to be able to maneuver appropriately. If you've gone one direction, you have to pivot. So I think we can go on to the next slide. So what do your existing permits look like? What are the restrictions, any ownership restrictions, things like that? Like I mentioned, are you handling product? If you're an alcohol business in California and you're handling product and you want to co-locate, it's going to be a challenge in the current environment. Other states, not as much of a problem. Ownership, investor disclosures, and it's just going to be a state-by-state analysis for you. And then it's consider your risk profile. There are people in the space who have a really high tolerance for risk. And in some ways that drives it drives the market and sort of what people are willing to do. But you have to think about that with your own existing business and your investor's risk profile. What are you willing to take on? So those are the types of discussions we have. There's not really a cookie cutter answer to that. But something that has to be done sort of right out the gate to make sure you're structuring things properly. We can go on to the next slide.
All right, and Charlie, thoughts on choosing the right entity, where you, your favorite topic, which jurisdiction did you choose? Any thoughts here? Is there one right answer, or is it right for your business?
Yeah, I mean, I think, I guess in terms of entity type, I think it's a little bit harder to say if there's one right answer. I mean, usually it's a question of where is it, in terms of structuring, right? Are you setting this up as a sister parallel entity to your cannabis business or alcohol business, or is it slotting under the holding company of your cannabis slash alcohol business? That will, usually that's, the tax piece is important here, because if you're trying to bring in, if it turns into a joint venture, you often end up being an LLC, because if you're trying to bring investors specifically into one vertical that's like hemp specific, if it's a totally different vertical, right? So you've like your cannabis business and your hemp business, and they're basically completely separate. Then, I think, you could be an LLC or a corporation. I mean, I think the advice people still give these days is corporation as kind of the default answer. And the tax piece is pretty important, how they're taxed. And then, you get a qualified small business stock exemption as a corporation, which a lot of people like. I guess I would just say this, like my experience over the past, 10 years in cannabis is that people who think, oh, we'll be an LLC and we'll save money on taxes, nobody ends up having any cash to distribute. So you don't end up saving any money. And with the Trump tax cuts, which are probably going to be extended, the corporate tax rate's a lot lower than it used to be. So that, the tax advantage of being an LLC is significantly less. Say in the hemp world versus the cannabis world, you don't have to deal with 280E. I mean, you definitely don't have to do with 280E in the alcohol world. So that's one less factor to consider here. And then in terms of what jurisdiction people are forming in, I think the default advice still remains, just form a Delaware corporation if you're trying to raise outside capital and looking for sort of an exit at the end of the day. I know there's a lot of chatter about Texas and Wyoming as Nevada. I suppose there's Wyoming as well as alternative places to domicile your company. I think that's a lot of chatter for the average company. Particularly if you look at the reason why people are trying to move to Texas or Nevada, it's to allow the majority controlling shareholder to have more control over the business, really, which is not something that investors may want. But I don't think we need to go down the rabbit hole of Elon Musk's pay package, which is driving a lot of these conversations.
Yeah, my takeaway is that you and I have different chatter. We're standing around different water coolers if your chatter is about Nevada and Wyoming.
Well, also Delaware is potentially amending its corporate law, which is, for a lot of people it means nothing, but in the world of corporate law, it's a major change, and people are very up in arms about it. And Delaware is potentially changing its law to sort of, because it wants to remain attractive to businesses.
Interesting. All right. Well, we can slide through the next one. Ian, I'm calling on you. Heads up. Okay.
I would just add, just really quick on the last one, for us, like for our second fund, for instance, we are always going to prefer investing in corps and not LLCs. In fact, I think we would actively avoid investing in LLCs because it creates issues for our own investors too. So, yeah, just giving that context.
Speaking of things you look at when thinking about investing, good segue there, thank you. You know, we're going to dive in from our perspective on, you know, what we see as doing it as legal counsel, but as you actually evaluating these companies for strategic investments. You know, what are some of the questions you ask? What are you looking for under the hood? Particularly these days on hemp beverage brands and looking to make some investments here.
Yeah, so are we only talking about beverages in this context?
I'll take whatever knowledge you're willing to share from your side of the table of trying to deploy capital.
I think really important is strategic positioning. And if we're talking about kind of mass distributed products, like beverages, for instance, that's about where do you sit in the distributors framework and also the retailer too. So, you know, we want to know who are you most meaningful to within a distributor or a retailer's portfolio. And we really look for evidence of success in a micro sense. We place less value, for instance, on, oh, we're in Total Wine and more across the country. That's great. I really would like to see execution in market, in specific markets, which is to say that I think that if you can really knock it out of the park or show strong performance in a market that is meaningful, that looks better on average because an investor, whether it's us or someone in the future, will look at that and say, okay, well, when I assess this company and its future, if they've done well in these markets, in a way, you almost want to save that ability for you to prove you can execute in new markets for future investors. You want to give something that they can sink their teeth into. And so if you kind of go super wide too fast, I think, well, the difficulty level of that is high. And then if you do screw up, it's going to hurt more than if you show, you know, more being a little bit more cautious with the capital that you're deploying. So repeatability is key. One other thing is data-driven analysis from our perspective. We're always looking to understand where you sit in terms of depletion. How do you perform within your distributors? If you have a D2C business, what are some of those metrics? Understanding what your classic like LTV to CAC and ROAS, things like that. And then last one I'd say is just depth of financial modeling. And when I say that, I mean just being really tight on your cost of goods. It's the one thing you can truly control. And so those that kind of are more general or maybe more lackadaisical in their approach or thinking, they're not super tight on costs, is generally a red flag because, again, that's the one thing you can definitely control. So I'll pause there or stop there.
Perfect. And do you mind dropping some of those acronyms into the chat for those that aren't as familiar? Which I guess if you're not familiar, maybe you should get familiar if you want Ian to invest in you. So yeah, that'd be helpful.
Yeah. That being said, I think there's an open debate today about direct to consumer versus retail sales. This is a heavy liquid product. Yeah. So most beverages that I'm aware of outside of hemp beverages, if you're talking about billion-dollar brands, they really built them in a retail context or an on-premise. That it could be that this is a new industry, and so you know we're going to see the first billion-dollar brand built in a D2C standpoint. I think as the industry scales, even the leaders in D2C would acknowledge that you kind of need to also execute at retail too. So I think retail is really important for this product category, and so executing there in general for us, it looks like a something that has a long duration to it, I guess is what I'd say.
Cool. Oh, Charlie, you're raising your hand. Yes.
Yeah, if you don't mind, I have just a couple questions. On just talking ROAS, what are your thoughts? Like, where are you seeing people advertise? Like, where are companies
Mhm.
focusing on advertising, and where do you think like the highest, where are you getting the most bang for your buck in terms of advertising? Like, is it social media or?
Yeah, I mean, I think people would have different answers for this, but the Meta platform has built an incredibly good platform, and it's not something that the cannabis industry has had access to. From what I know, I do think that there's a fair amount of people that are using those platforms, also AppLovin. You hear things like that. I do think it's getting a little bit more difficult. I've heard that you're seeing more accounts get shut down and things like that. Even Stripe, for instance, is kind of spiky in its willingness to support. DoorDash obviously is powered by Stripe, so they're able to do it, but not everybody has that level of pull. And then just on the going back to the ROAS part of it, yeah, it's I think it's mostly on those types of platforms. But again, the other part about this is that it's a function of the cost of acquisition of customers. The more people that are trying to attract a certain customer profile for this product type, the prices will go up, and so there will be normalization there. So it can become more difficult in many ways. Setting aside the legal or regulatory side of this, which is a different beast.
Thanks. And actually, Michelle, that does remind me of like a funny ROAS story. Which was just that, oh no, like an ad of a hemp beverage. It was a client. I won't mention the company, their client though. Got served up to my father-in-law when he was on a bridge forum online. So I don't know how the targetings worked, but he was like, "Oh, Charlie, I saw a hemp beverage today."
Yeah.
He is not a hemp beverage consumer, but he does love bridge.
Like the card game bridge?
Yeah, very popular down here.
Okay. Sorry. Interesting. All right. You completely threw me off track. Thank you. All right. Next slide. Being investor ready from the fund corporate side. Obviously, we heard from the investor side. Jeremy, do you mind hitting the fund paperwork cleanup that you get to spend your days doing? With coming off mute.
Thanks. Obviously the operational piece is important to being investor ready, but there's also what I kind of refer to as corporate hygiene. And this is just, I mean, it starts from before you're even necessarily thinking about investors, just when you're forming your business, keeping good governance records, making sure, I mean, this is something that we do, right? So hire a good attorney to just organize this stuff for you, have it at their fingertips. Your governance documents, a good, nice, clean cap table, easy to understand, your books and records, good financials. Ian may have other comments on this, but I've found that it goes a long way to kicking off that relationship. If you can produce a nice, clean diligence package really quickly, it just kicks those things off the right way. And it's going to make everything a whole lot easier for you when you say, oh, I need money. I need to kick this off now. You're not chasing executed documents and things in your email, things like that. Employee documents, all of that stuff. And then there's also just good business practices. I mean, this is a space where, in a variety of states, you have levels of types of regulation. There may be things that are permissible, but we can kind of read the tea leaves and maybe they won't be, or maybe they just don't seem like they're good business practices. And being on top of that and knowing, like, seeing where the trends are, those I think also, again, maybe Ian has comments there, but I think go a long way to showing an investor that you're built for the long haul and you're not, just capitalizing on some state of play that exists right now that might not be long term. So I think anything you can do to stay organized there, start thinking about if you're an investor wanting to see stuff, think about that the day you form your company, and get an attorney to just organize that stuff for you so you don't have to think about it, or do it yourself.
I've got nothing to add. I agree with everything that you said.
Music to his ear. All right, so jumping into financing and just kind of level setting the stages, the process, what that looks like. Charlie, do you mind just kind of walking us through what, for those that haven't done it before, what fun is in store for them?
Yeah, sure. And I think we put some links to articles in here, right, Michelle?
Didn't
Towards the
in the
end.
end.
I think they came out in. Contact us for links to articles.
Yeah. Anyway, so I found like I tried to like write this article about like 10 key decisions for making when structuring a financing, right? So when people come to us, they're trying to raise money, right? You want to sort of structure your thinking in terms of what you're trying to do, right? And so these are kind of the considerations you want to think about. Obviously the first one to think about is just like what stage of financing you're going at. So again, hemp beverage is pretty young. So a lot of people right now are doing, what they call seed stage financing, right? So big picture, right? You've kind of got two buckets of raising money. There's what you'd call a priced round and a non-priced round. So a priced round is, typically like a Series A financing. You're raising X dollars at Y valuation, right? You're raising $5 million at a $20 million valuation, right? So the tough one here, obviously, is what's your company worth, right? Particularly if you're very early stage, that's a tough discussion to have with investors when, particularly if you're not profitable, or I guess, sometimes with tech companies, you don't even have revenue yet, right? So it's kind of an awkward discussion when you're trying to say, hey, we're worth $10 million when you haven't made a cent yet. So then you get to sort of the non-priced raises and your safes and your convertible notes. And usually with these financing, you can sort of punt on what the company is actually worth to a later stage financing, where the money that comes in during this seed stage will convert to equity at a later stage at that valuation at a later stage, or more commonly, some discount to that later valuation. Now, I say usually you can avoid the valuation discussion. The problem is a lot of investors these days want, they want a valuation cap, meaning that like in that later stage, they will benefit from a certain valuation, worst case scenario, right? So if the valuation cap is $5 million, you raise money at $10 million, they're still going to convert as if the company is worth $5 million, right? Which means more equity for them. Obviously, once you get into that valuation cap discussion, now you're back to where you were trying to avoid in the first place, which is debating how much your company is worth before you've really achieved the scale you were hoping to achieve. So that's kind of like the fundamental decision. Now you can jump right into a price round. You don't necessarily have to do a seed stage financing. It is usually common to do a seed stage financing. It does assume that you're going to do a later stage financing. So if the company only needs to ever raise $1 million, let's say, which might be optimistic, right? You might find out later you need to raise money. But if you only ever need to do one raise, it doesn't really make sense to do it as a non-priced round, because now your investors are stuck owning these safes, simple agreement for future equity, or convertible promissory notes, which are really designed to just kind of buy you time until you do a later financing. They're usually a lot simpler and cheaper from a legal perspective. So that's another plus from the company's perspective. Yeah, so these are just, some terms. Again, there's a few books on this that are pretty helpful if you haven't gone through this process. The Brad Feld book is pretty good. I recommend companies read it when they're doing this. A lot of this stuff is sort of convention rather than logic. So if you could be this, some astrophysicist, far smarter than, me or Jeremy, but if you haven't gone through financing before, it's going to be a little painful because you're going to say, well, that doesn't make sense. This doesn't make sense. Why are people doing it this way? The answer in a lot of cases is this is just the way people do it. There's just a lot of conventions here. And particularly if you're trying to keep your legal bill low, which is unfortunately the case for a lot of people, the way you do that is by not reinventing the wheel. So, and it also can scare investors off if you sort of present your investors with like, hey, I think I'm smarter than everyone else in the world. So I've cooked up my own unique way of raising money that you've never seen before. And that's, going to raise some eyebrows. And, I always say like, you want people to focus on, your product or what's innovative about your company, as opposed to like, hey, we somehow think we've invented like a new way to raise money, because now everyone kind of has to go through the brain damage of figuring out what you're doing. Yeah, the NVCA docs that Ian just put in was for a later stage financing. Hope the goal here was to sort of standardize the process. So again, like, my advice is don't reinvent the wheel. Yeah, and then common stock and preferred equity we could talk about. So the common stock is, you're all kind of at the same level. Preferred equity really just means that it gets paid out first, whether in a downside or an upside scenario. So like the investors get paid back first. This is one where if you're doing preferred equity, if you got preferred equity around, like for the love of God, please model it out in Excel. And so you understand how it works in different scenarios, because, the math is not very complicated, but, if you have, you got to think ahead to see how it plays out. And you got to think also ahead to, later stage rounds, right? Because you're probably going to raise more money if you're trying to grow a major national brand. And then lastly, debt, for these type of companies, debt is probably not going to be an option because you don't really have any collateral. And if you're talking to the lenders who are sort of in the space or adjacent to the space, they're looking for people that are making real money, that own real estate, that own collateral, that if the loan fails, right, they can just step in and sell your real estate and get paid back. You can't do that with a brand. I guess, for example, it's like you saw, like if you ever got the email that High Times is going through receivership and they're selling their IP. You want to take a guess how much that IP sells for? My guess is if anyone lent them money, they're not going to get paid back based on the sale of that IP. It's like startup IP is not really worth much if it's brand related. Next slide.
And just to interject here, if Charlie is doing your fundraising round and assigns you homework, don't feel bad. He assigns me homework all the time. So it's not saying anything about. There's a lot of reading lists that get assigned around here.
Yep. Keeps people on their toes. All right. So timeline of a financing. So, okay. So the other thing, I talk about like price round, non-price round. So the other kind of big thing to think about up front here is, do you have a lead investor or do you not have a lead investor? This is like a sort of a dance, because, if you've got a lead investor that's going to put down a significant chunk of change and sort of take charge of the process, it makes things a lot easier because you can just deal with one person. If you don't have a lead investor and you're trying to cobble together a round, which is probably far more common these days, right? Where it's like, maybe it's your uncle, maybe it's one, high net worth person, then you got to be careful there, because in my experience, wealthy people think, well, of course you're trying to raise money from wealthy people because they have the money to put in. The challenge is that wealthy people think they know everything. And, I've worked with a lot of clients where, you got one person that wants to do a safe, and then your next investor comes in and says, only idiots do safes. Anyone who knows anything does a convertible note. And now if you've already raised money that first round, you've taken in a safe, and then a second person wants to do a convertible note, it gets a little messy. So if you don't have a lead investor, you sort of want to like get consensus by getting people to agree at a high level to terms through a term sheet, or maybe just an email if it's like a early stage round, just bullet pointing that what they're looking for. Or otherwise you're going to end up in a situation where you kind of have to change horses midstream, which is a mess. And that's a term sheet, pre-signing, period, signing. Yeah, so usually with these early financings, which is what we're probably talking about here, you don't necessarily have a sign and then some waiting period and then a close, which would be typical like in a cannabis M&A deal where you need to get regulatory approval. Here they can fund as soon as they sign. And usually you're doing this on a rolling basis. So like, there might be a several month process where you're bringing in a little money each week. But, I would just say like one thing to think about here that I've seen a lot of people run into problems with is, sometimes these documents will set, everything has to be done within 60 days and it goes on to 90 days, 120 days, and you have to amend the documents. Likewise, we're only going to raise $1 million. And then halfway through, you realize you're able to raise $2 million and you have to go back and amend the documents because the document said you were only going to raise $1 million. So that's another case. So I'd like say, like my advice is here, try and think ahead and avoid a situation where you have to go back and amend documents because that, again, it's a hassle, it increased costs. And, again, you want to keep things as simple as possible. Next slide.
All right, I'm gonna turn it to Jeremy and to breeze through these ones a little bit quicker because I think we've kind of
Sorry.
been touching on that. Yeah, that was good. I'm glad you got my scolding there. To kind of highlight who is investing, who are we seeing in this space, obviously besides, other people on the call with us, but who besides has been investing, or do we anticipate it, where the funds coming from?
Yeah, absolutely. And, as I think maybe as Ian mentioned at the beginning, there's still, a bit of a challenge looking for capital here. There are, folks like Ian who are raising funds to do this space. I'd say that we still see a lot of, high net worth individuals, family offices, and still lots of friends and family rounds. To sort of pick out an important piece here, I'd say you want to focus on accredited investors when you're raising money. Well, I think there's some more slides maybe about securities issues, but if you're raising money from non-accredited investors, you have heightened securities regulation obligations, heightened risks, and generally in terms of your cap table, I mean, at a high level, you want investors, obviously any investor is going to be invested in their capital doing well, but you don't want to be raising money from folks that it's going to be a real huge life-changing problem. If things go sideways, it's gonna cause problems for everybody. You just don't want it. And again, there are some limitations if you're raising money under the registration exemptions from non-accredited investors. Quickly, I think the requirements there, if I remember, $1 million net worth, not including your primary residence, or income individually of 200,000 for the past 2 years, or 300,000 for you and your spouse. In terms of what investors are looking for, I mean, look, Ian touched on some of the financials they're looking for. I touched on some of the sort of bookkeeping, diligence items. In terms of a private placement memorandum, investment decks, I'd say for a lot of the early stage financing work that we're seeing in this space, as well as in cannabis, a full-blown PPM is probably not totally typical. You might see, robust disclosure, disclosure schedules and risk factors, along with your suite of investment documents. You can do a PPM, and Ian may have some opinion on whether he, sort of needs to see it or wants to see it. Obviously, that takes a little bit more input from management to flesh that out. And then just to touch quickly on crowdfunding, there's a lot of nuance to discuss there. Crowdfunding is done through online platforms that are registered. There are a number of securities compliance issues to be aware of there. It's more robust than a private placement offering under Reg D. You have to fill out what I would sort of loosely call a mini registration statement. I mean, it's not a registration statement, but you have to fill in a significant amount of more information than you do for a Form D filing. In terms of success in crowdfunding, I've really seen it be hit or miss. The platforms usually take a cut, and some folks, don't have a lot of success. Some do. If you're a brand with a big brand identity, it might be something that can work. other businesses might just not be able to have success there. And Ian, I don't know if you have any comments, obviously feel free to chime in.
I don't care about, or don't care. PPMs are not, we're going to be producing something internally for an opportunity anyway. We wouldn't rely on someone else's work. But that could be different though. Other people might feel differently.
Yeah.
So, yeah. I wouldn't just,
Yeah. I think we can go to the next slide.
All right, and I'm gonna pick on Jeremy to keep going with this one, but put a 2-minute stop clock because I want to make sure we have time for questions, and we still have quite a bit to go.
All right, well, I think this is a big one for Charlie, but I can chat about this. Right? I mean, engaging with investment bankers, I would say, obviously, in an environment where you're having a hard time reaching out to, if your network doesn't have the capital to invest, you need some help finding that capital. Investment bankers, placement agents can help there. Those deals, I would say, something that Charlie and I deal with is we have folks that come to us after they've signed these engagements, and the issuer might not know exactly what's in there. And sometimes they can be kind of rich in terms of what is owed on the back end for finding investors. I think you're going to want to think about like what's the deal size? Does it make sense to take a cut out? And is it going to make sense for a banker to kind of spend time working on the deal depending on the size? You can go on to the next slide. Again, warrant coverage, which is essentially equity out of the company for helping with the transaction. There may additionally be transaction fees. There's usually tail fees where if you end up working with somebody later that was introduced during or that you even met sometimes during that period, there can be fees associated. You want to look out for exclusivity if that's something you want to negotiate. And there are registration requirements typically. I mean, there's some exemptions, but typically registration requirements for doing that type of work. Largely, the liability there would largely rest with the broker, but you want to make sure you're working with somebody who's legit and is all buttoned up in terms of what they're doing. And frankly, just have the conversation, see if you can get some references in terms of, folks they've helped out in the past. Because it is challenging to raise money, and a lot of folks will tell you that they'll take some money for doing the work for you. But if they can't deliver, you're going to spend a lot of time and maybe money dealing with that and not have much to show for it. Did I hit my 2 minutes, Michelle?
Yeah, you're fine. You're going to get a copy of these slides and the presentation. So I'm going to skip going through the term sheet stage. As you'll see in the slides, there's a lot of, this is way too complicated to cover in 3 seconds on a webinar anyway. So we're going to jump down to some hemp regulatory considerations. And Ian, I'm going to keep indicating to you, I'm coming to you. I'm going to get into a little bit of the federal, state, and the hemp state by state stuff. But before I do that, if you can come off mute, you touched a little bit on at the beginning what you look for in terms of revenue. But is there a little bit more you could talk about kind of due diligence priorities? Are you checking if people have their state hemp licenses? Are you more focused on sales? Are you guys keeping up with, federal farm bill, state by state compliance? I guess what are some due diligence priorities from your perspective?
So, a few things. It really comes down to, on the beverage side, quality of distribution, go-to-market execution. That's one. I'd say product quality and regulatory compliance. Number two, so you asked about compliance. Yes, I think having the right QA, QC protocols, adherence to best practices from a regulatory standpoint is really just a non-negotiable. But I think, so I guess what I'm saying is that deeper than that has more to do with efficiency of capital, what is your own capital allocation strategy? How do you make the decisions that you do in if we're going to invest in you, we're not going to be able to, we're not at your side every single decision you make. So we have to understand how you think about using the resources that you have. How do you actually derive what returns you're getting from the resources that you're already spending money on? That's a really important part about how we can get comfortable with the management team. And then, yeah, in terms of I guess the regulatory side of things, that's partially our job, I think, to ultimately be paying attention to these things at a federal and state level. What will end up happening is that, as I've alluded to before, you have some companies that maybe go really hard in the paint on one state, and before we had the clarity, or let's say they're doing an inordinate amount of sales in one product category that we think has more risk. That's a strategy. It might not be a great fit for us, but that's not to mean that it might not succeed. It's just that there are different levels of risk that we're all willing to take in this space. And we're so bullish on the category itself that to take undue risk and maybe step on a landmine in the process is not the game. There's no point in doing that. Like, we already have a tiger by the tail here, so just don't screw up. That's like number one, and stay in the game.
Sure. And then, obviously I was trying to transition to regulatory because those are my next slides. But backing up from that, is there anything in like any key indicators you look for with brands, beverage or otherwise, any expertise? Is it, are they active on government affairs and lobbying? Is that interesting from an investor perspective? Is there anything else kind of secret tips and tricks that would make anyone listening be more attractive versus their competitors?
Lobbying is a tricky, like, tragedy of the commons, because I actually don't know that spending a lot of resources as an individual company is the highest return on investment, or you're going to socialize the benefits beyond your own business. So that's a noble task. But is it the most efficient use of capital? Probably not. As for other, like, regulatory features, I mean, like I said, if you are in direct contravention, say, let's, for instance, that you are attacking a market like New York City or like New York. My challenge with that is that we have a view that New York is going to flip in our direction anyway. So one person might say, okay, well, I'll play the game now, expecting that. But for us, it's like, well, if you're really trying to build a business with staying power, cutting corners by getting involved too soon looks a little bit lackadaisical to me. That's, again, that's just a house view of ours. Other people might have a totally different view, and they might be very successful in doing that. So it really just comes down to risk tolerance around these regs.
Cool. Makes sense. All right. I'm going to breeze through the next one because we do have a couple questions in the chat. So potential law changes, federal and state, all the time, pay attention would be the summary there.
Definitely.
Farm bill set to expire in, third year extension. So set to expire in end of September. A lot of the authorizations, the funding expires in March. So there is going to be another appropriations round end of March. There is some language being batted around. So yeah, pay attention federally. And then obviously states, I started the call by saying states are changing their hemp laws. Like, spoiler, every year states change their hemp laws. It isn't new because you're new to beverage or that's the product du jour. Every state since pretty much 2015 has been monkeying around with their state hemp laws in some form or fashion. Doesn't always mean they're going negative. Some states going positive, but certainly a lot to keep track of and pay attention. On the next slide, just kind of current trends. That have been emerging over recent years, prohibiting certain cannabinoids, manufacturing techniques, meaning isomerization or synthesis, where I think everyone universally has acknowledged 0.3% delta-9 or total THC doesn't really translate to a liquid or a gummy. States are looking to then set those milligram limits. Any state without robust packaging, labeling, advertising, taxation, all of these components are getting added. A number of states already had them. Texas, for example, has testing and packaging. They don't have a cannabinoid limit. They don't have an age limit. They don't have a tax structure. So, states looking to shore up and add additional licensing frameworks for where they might not currently exist. Then next slide, just in terms of investor due diligence, we've seen this pop a couple times. I won't say it's every time, but a couple times, checking, do you have the state permits that are required? And if you don't have them, did you at least know they were required and chose as a business not to, and have an explanation of why you didn't get said licenses? And just a reminder for those that aren't aware, there are 12 states out there currently, obviously this can change at any point, that do require a hemp retail permit, even just for D2C sales, if you're shipping to any customers located within their state. So, if you're building a D2C brand or business, don't say, oh, I don't need any hemp retail license. Spend the time to do the due diligence, because again, not every time, but sometimes your investors or your insurance or your bank is going to ask and confirm. And certainly your lawyer will ask you if you have all the necessary permits. And you might, in some of your documents, have already represented and warranted you do have those permits. So it'd be good to double check what you have. And I am going to skip through the rest. Charlie, do you want to just hit on securities law and do like 30 seconds and tell everyone they need to know? And then we can take some questions.
Yeah, I'll just keep it really brief here so we can talk about regulatory stuff. But I mean, it doesn't really matter what line of business you're in. Securities law is just focused on disclosure. So, there's no, again, coming from the cannabis perspective, right? There's no law saying that, cannabis companies can raise capital. It's just disclosure, right? It's the same thing with beverage companies, right? It's just a question of disclosure. Everything else, it would just be like raising money for, like a company that made shoes.
Okay.
There's a lot there, but we
Thank
don't
you.
have time to get.
And we did include some articles to read. The slide got moved around, so go us. You'll get a copy of the deck. And we've been dropping some in here as well. So, all right. I think I touched briefly a couple of questions about Farm Bill and whether we're going to see a revised definition. I'll give my 2 cents of saying, I don't know. We'll find out. Happy to give more of a real answer. But kind of in the interest of time, I don't think anyone yet knows what is going to happen federally. But Ian, if I could just ask you, keep picking on you from the investor perspective, how much does the federal uncertainty weigh? Or as you, I think, have alluded to, this is kind of playing out at the state by state level at this point.
Yeah. I think the highest odds of something federally completely shutting this market down, those highest odds were probably behind us, as in maybe like with the Miller Amendment's first introduction last year. And that's not to say it couldn't still happen. Absolutely could happen. But I think the highest likelihood of it happening has already passed us, is behind us. And given the political climate that we're in, states' rights as a general course of business are probably or likely to reign supreme, or that's kind of what this administration would want in the first place. And then as far as the state by state game, yes, we've seen that you can have positive regs that can put in place, a framework that big companies can get behind. I'd point to Georgia as one of those. And then equally, you can have states like Virginia that go in the other direction, become more restrictive than the federal government currently allows. And so that's why I said from the very beginning, it can go in both directions. But again, we think that this is a state by state game. Federal is going to do whatever it's going to do, but a push is a win. And meanwhile, it's all about who's able to block and tackle in the markets that matter. And yeah, that's kind of it from my perspective.
Cool, appreciate that. And I'm not sure, someone asked what are the multiples? I'm not sure at what point we we were discussing that. So not able to ask, but Clifford, if you want to re-ask the question, we can come up with an
Like
answer.
like valuation multiples on revenue or EBITDA.
Yeah, maybe that was the context.
I don't know if, I defer to Ian on this one. I don't know if we're at that stage yet. I mean, this is, startup world, I feel like is the valuation is like, is the sense I get versus, if you're selling a dispensary, in Colorado, right? Someone can give you, hey, right now, a retail store in Colorado is going for like X times annual revenue, X times EBITDA.
Yeah. It's probably a little bit more across the map right now, but in general, I think like low single digit revenue multiples. If you were to get away from that, as in go higher, something you that would be out of the ordinary, in my opinion. And then beyond that, it really is very specific.
Okay, cool. All right, and just to remind everyone, we'll share a copy of the deck as well as the recording for everyone to watch this again on Saturday night with their entire family, which is obviously what I anticipate everyone's going to do. But if you have any additional questions, the last slide would have our contact information, and feel free to reach out to us. Ian probably wants to get bombarded less. But also Vicente, happy to take any of your additional questions. Or
So I will assign you homework if you reach out to me.
yeah, fair warning. And I'm going to talk about hemp charts and state by state tracking. So we all have our roles to play here. And when our powers combine, we can help you raise some money here. But really appreciate everyone tuning in. And thank you, Ian, so much for taking the time to share your knowledge and let us know for you with questions. But thank you everyone for tuning in. Appreciate it.